Are you ready?
Ready.
All right, let's go. Kevin here, top 1 financial advisor and best-selling author. We are here to talk about the stock market. Today, we need to discuss ETFs. And the question here is, how do I know and understand what is inside of my ETF? And we're going to discuss why this is important. The key here is an ETF is an exchange-traded fund. It is a package of stocks put together for us for one simple and easy price. And they are amazing. Now, they're not perfect. I actually did a video last week on some of the disadvantages of ETFs. But again, the benefits for me way outweigh the disadvantages. I can only find like 2. But in either case, this is what you need to know. And here's the danger of not understanding what your ETF does and what is inside it. Number 1, every ETF has a purpose. And you as an investor, you get the ability to choose which ETF you want to invest in to serve a specific purpose. Some ETFs are to invest in everything and to have the most diversification possible. That's something like a Vanguard total stock market ETF. That's something like an S&P 500 index ETF. It has the top 500 companies. It has the entire U.S. stock market. That's what it's supposed to do. We talked about one yesterday about international stocks. That's fine, right? If I know what I'm getting into and I'm looking to diversify, I'm looking to invest in companies that are not based in the US, I need to understand that before I jump into it. Whether it's good or bad, I need to understand what I'm doing. There are some that are only focused on, let's say, technology companies. We'll talk about one today. There are some that are only invested in banks. All of these things, you need to understand what you own, why it's important, what are the fees, and we'll discuss some of that today. The other thing that you want to understand, I think is the biggest risk for new investors, is what we call duplication. You are increasing your risk because you may not understand what is in your ETF, and you may, for example, invest in a fund that has, I'm throwing a number out here, invest in something that has 20% of its money in Apple, and then you have another 5 or 10% of your money in Apple. That means that you have 30% of your money in Apple, and you may not realize it. Now, that could be a good thing for you, right? Or it could be a bad thing if you don't believe in Apple that much, or in any one company to that degree. Another great example is the ARK Innovation ETF. I talked about that one. It has a lot of money in Robinhood. I don't like Robinhood as a stock. They have a lot of money in Coinbase. I don't like Coinbase as a stock. Right now, you know, how you feel about the app and what they do, that's a different story. But as an investor, I don't want to hold either one of those companies at this particular moment in time based on, one, they're brand new in terms of the stock market, and they're high risk right now because tech companies aren't doing all that well. So if I don't understand that and the fund is down 50%, then you don't know why, right? But if you understand how to look and see what's inside the ETF before you decide to do that jump, that can help you to make a better decision, and that's what we're going to cover today. All right, so there are 3 different ways to find out what is inside your ETF. They're all easy. One of them is my favorite, and I'll tell you why. But all of them have their benefits, and drawbacks. All right, so the first one is ETF.com. That's what you see here in the background. Funny enough, there's an ad for Invesco. You'll see why that's important or funny to me here in a few minutes. All right, so this is Invesco QQQ. That's a ticker symbol. You can put that in. It'll bring up, what the price is at this point in time. As of today, where you see the date right here, right now, for one share is $351.83. No, I don't have to buy the full share. That's totally fine. But this is ETF.com. The advantage here is I can pull up almost any ETF. It's going to give me the important specs, and they'll give me a grade here. I don't really care about what they grade it as, but they have a grade that matters to you. Now, if I want to look for other important information before I get to what's in it, you get everything here on the right-hand side. Inception date. When did they start this fund? My brother's birthday, but in 1999. I think that's funny. Then I have the expense ratio. We did an entire video on expense ratio, so you can check that out. And then what I want to do is scroll down here. Keep going, and you should see, here we go. This is how well this particular fund has done over time. You can see that it's really started to trail off. After really, once we hit 2022, it just started to fall off. Now we know why. We've been talking about why that's the case for a while now, interest rates, so on and so forth. But I can also go here, past 5 years, and see what it shows me, and really just understand how this particular ETF has done And then I can also compare it to other ETFs, which I think is cool as well. Now, if I keep going down here, this is where it tells me how much is invested in other countries. So 98.56% is in the US. You got some in Hong Kong, Netherlands, barely anything in China, and nothing in Canada. And then right here, it gives me the top 10 holdings. So this is why I brought up Apple. I knew Apple was going to be one of the biggest holdings here. So 12% is in Apple. If you're fine with that, I think it's fine. I'm not panicking over it. However, I may want to be careful if I have this in Apple stock, or I have 3 different ETFs that have Apple at the very top. That's a lot of exposure to one company, or any of the companies that could be in this particular ETF. Interesting enough, Costco is here. I didn't know that before looking at it at the same time you are doing this video. Now, if I want to see everything that's in here, then I'm going to go to view all, and it'll give me a list right here that I can scroll through at my leisure to see what is inside this ETF. Now, here's the thing. Do you have to go through every single holding and make sure that you don't own any one of these stocks on in an individual basis? You don't have to. It's just important to at least know what the top 10 are. If you want to, go above and beyond, that's totally fine. For example, if we look here, they've got 0.99, so basically 1% in Intuit. If I own QQQ and I own Intuit, I'm probably not going to panic. I don't think that's a big deal. I don't think I need to pay attention to it. But you guys see me bring this up all the time in a Grade Your Portfolio episode, where I see QQQ and then a whole bunch of Apple and then a whole bunch of Microsoft, and then they have another fund that also has a lot in it. So again, that's what I'm risking. I'm really paying attention to what's in the top 10 and what else do I own, because I don't want to overweight myself in one particular area. Because if Tesla doesn't do well, if Nvidia doesn't do well, then I get hit. I lose money in this fund, I lose money in the stock itself, and then if I own a total stock market index fund or something like that, and it's also one of its top holdings, I'm losing money there. So one company lost, right? One company didn't do well, I'm hit 3 different times because it has so much of its money tied to that particular company. So you just want to be careful there. So in this case, here are the top 10s, and you can here's the top 10. You can scroll through and see all of these investments here. Only reason I'm doing QQQ is just, again, one of the most popular ones out there. All right, so that's one, okay? I like this one because it's really simple, pretty easy, and I would consider this unbiased because it's not made by Invesco, meaning they don't have any bias in trying to sell you this ETF. They're just giving you the general information. So unbiased, kind of in the middle. The next one is Yahoo Finance. We've talked about this one before. Yahoo Finance is my favorite for doing this, and it's my favorite because I can quickly compare to other stocks. We do this all the time where you hit full screen and you compare. That's a whole different video. But in either case, I can see side by side how Invesco does versus another stock. If you've been watching the channel long enough, then you already know how this works. But how to find this on Yahoo Finance, go to Holdings. Should click that and it should come up, and I can scroll down. It's actually a lot faster too, I think, than etf.com. And then boom, you're gonna get very, very similar information here. Apple, Microsoft, Amazon, Tesla, PayPal, Adobe. Same stuff, all here. You get the point. It depends on when they're calculating these numbers. A lot of the information should be very, very, very similar. And again, it's gonna be the exact same information. I just tend to like Yahoo Finance because I'm on it all the time and I get to compare side by side. And not that you can do it on etf.com, you can. So that's one. Now I don't think it gives you the full, here's a disadvantage here. I don't think it gives you the entire list. You can only get the entire list from etf.com or the third resource I'm going to show you as well. But I don't think it's super imperative. I don't think it is a must-have to look at every single holding. I think QQQ has 100 different stocks in it. I don't think you need to know all 100. You might want to know the top 10. You might want to know that top 20 or 25 if you care that much. But the top 10 are the most important because, again, it's the top 10. All right, next and final is the actual, the investor itself. What is this, a survey? What is this? Okay. Sorry about that. I'm not editing it out either. So for any ETF, they are created by some sort of fund manager. So Invesco, iShares, which is owned by BlackRock, Vanguard, somebody puts together these ETFs. ARK, again, somebody puts them together. They have a website, and this website is to entice you to do that. Now, if you've watched any sports cast in the last few months, really, they're doing a push for a lot of their innovation and trendy ETFs, which I think it's fine. It's just kind of cool. We get Grant Hill and Candace Parker here, and they want you to invest in this particular fund. So know that when you go to the company's website itself, they're gonna try and sell you this ETF, and this ETF is known to be quite solid. But again, you're gonna get a little bit more information, and they want to make it pop. They want you to invest in the fund, which again, I don't have no beef with this particular fund. In either case, you get the most detailed information here. So notice none of the other ones talked about these cool stats, that it is the #1 large cap growth, which means big companies that grow. Biggest large cap growth is #1 out of 317 different ETFs in the last 15 years. Based on total return. It's made more money than 317 other ETFs. That's cool. That makes me want to buy this. I don't own it currently, but that makes me want to buy it at some point in time. But in either case, yeah, I didn't see that nowhere else, right? So you got some other stats here. Again, it does have 100 companies, so I'm not going to study every single one, but again, pay attention to the highlights here. All right, so how do I find out what else is on it or what else is in it? Again, the answers are always going to be the same because it's the same ETF. I can scroll all the way down, and it should be right about here. Here we go. Top holdings. I highlighted it from earlier. And boom, it should bring us a separate, it'll load here. All right. So this gives us everything that is inside the entire ETF. If it wants to load for us. And here we go. So again, we've got the top 10. It's all the same. Now, in terms of which one is the most accurate and which one is updated the most, I would assume it is Invesco's website, because I think, let's see, Costco was at 10 here. It should have been, so it dropped down a bit, right? So Costco was 10, Costco was 9, Broadcom was down here at 10. They have them switched around here. Again, not that big a deal. Depends on how the market moved, depending on which one made money that day. Again, it's not that big a deal. It's very rare that you're going to see, number 10 jump up to number 1. That almost never happens. But you have it here. Okay, so that's where you get the top 10, and you can see all holdings by clicking here, just a bit below, and then boom, this will pop up and give you everything that's inside the ETF. Just as we saw earlier, we had there you got Moderna, which I know y'all have heard about. You got Micron, Starbucks is there. Here's Starbucks, and then Intuit again, 0.99%. So again, very, very similar to what we had earlier. So again, it's all there. The main thing, the takeaway here is that you at least want to know that top 10 so you don't duplicate and you understand the purpose of this particular fund. I think that's the cool thing too when you go to the company's website, is that it'll tell you, basically, we created this ETF to do X. In this case, they want to give you basically the best or the top 100 tech companies. When we say that tech is down, this is usually what we mean, even though I don't really consider a Costco a tech company. Yeah, I'm not going to fight them. I like Costco anyway. But in either case, this just tells me what the fund does, what they have, and then can help me to decide whether I want to invest in something like this or not. Now, you've heard, I'm sure if you've been on Twitter, if you've been on literally anywhere that talks about investing, people love this particular ETF. But, right, if you don't love tech, and that's your prerogative, right? But if you don't love tech, this is not the ETF for you. You would not know that unless you knew how to find out what this ETF does and what type of companies are in it. If you already own these top 10 and you have significant holdings in the top 10 and maybe a few others, then you probably don't want this ETF because, like half of it, I think it was like 52% or so of this entire ETF is inside of this top 10. I think we saw that from Yahoo Finance. So if half this entire ETF, which is only 100, If half is in the top 10 and I already own all the top 10, then maybe, just maybe, I don't need it unless I really want that extra diversification. So 53%. So we're talking over half of it is in this top 10. If I already own the top 10, which a lot of these I do, I've got Apple, Microsoft, Amazon. I have Alphabet. I have Facebook. I own some Tesla. I own Nvidia. I used to have PayPal. Y'all know I dropped that. And I have Adobe. And I have Costco. So I basically already got 9 of them. This might be why I don't invest in QQQ. But again, that other 40 some odd percent is still important, right? So again, weigh your options. The key here is to be more informed and to make more informed decisions. ETFs are less risk than owning individual stocks because Adobe's not doing well right now, and PayPal we'll see what they're doing. But as a whole, tech isn't doing all that well. So again, any ETF you can find using these 3 methods. The last one is Invesco is not the owner of every single ETF. So you want to see, usually if you type it in, it'll tell you iShares or Vanguard and then give you the name. So you want to go to Vanguard for Vanguard ETFs, Invesco for Invesco ETFs, so on and so forth. Last thing here is that it gives you when this was updated. So it is subject to change. They do change these periodically, but this one was updated as of March 22nd. Today is March 23rd. So that may be the reason why Broadcom and Costco are flipped, and the others may update them more frequently. So I was wrong in guessing that Invesco updates it more frequently than the others. I don't think it matters. It's a small detail. But you've got 3 different ways to see what's inside your ETF. Let me know what you think in the comments below. Do you pay attention to the top 10? Is it something that you just be doing without thinking about at all? I don't think it's important for the larger index ones. S&P 500 it is what it is. But these more niche ETFs, you do want to pay a lot more attention to. All right, that is it for me. If you have a question or a comment, let me know in the comments below. That's how we create a lot of these videos. This was a question someone had asked, I think last week or so, and we said, boom, I'll take that, put it on the list, and here's that video. All right, that's it for me. I'll talk to you guys later. Bye.